How the SGX Nifty is doing for the time being. The rate on the screen is still down. We've got about a 20-point decline going in over there. Actually, some of the other markets like the Hong Kong markets are also far more somber today. So Asia is taking it easy this Friday morning. Mixed picture, and the SGX Nifty is in step with that. Well, today is an important day from a policy perspective as well, because we'll have the GST Council meeting, and it is Nirmala Sitharaman's first meeting as Finance Minister. Timsy joins in with a sense of what one can expect. Timsy, what could be on the agenda?
Well, the stage is set for 35th GST Council Meeting, which will be the first under the chairmanship of Finance Minister Nirmala Sitharaman. Sitharaman will be meeting firstly the state finance ministers for a pre-budget consultations, after which the same platform will be opened for the GST Council Meeting. Sources have told cnbc TV18 that the council is going to consider a whole host of items this time, including fresh proposal for e-ticketing for cinema tickets to curb tax leakages. Council will also discuss the proposal of reducing GST rates on electric vehicles and related supplies from current 12% to 5%. Apart from this, Centre will inform the Council regarding the direction of Delhi High Court to examine the valuation mechanism prescribed for solar power generating systems. Also listed is to consider the recommendations of group of ministers on lottery, where the GM was unable to draw a consensus and has left it for the Council to overcome the differential rate and keep only one rate of either 18% or 28%. The Council will also consider creation of state and area-based benches for GST appellate tribunals and discuss a detailed proposal on introduction of electronic invoicing system to curb tax evasion. The proposal this time is to begin it on a voluntary basis for large taxpayers and in a phased manner make electronic invoicing compulsory for all taxpayers. The Council will also consider an extension for the National Anti-Profiteering Authority, and some of the other items also include consideration of recommendations of Committee of Officers on use of RFID data for strengthening e-way bills, and a look at the fresh demand for the waiver of interest on delayed receipts of advance user charges. Let's see what finally transpires and what is in store for taxpayers. Back to you.
Okay, thanks a lot, Timsy, for that. But moving on to a CNBC TV18 exclusive, we are very optimistic about the road ahead. That's not me, that's the word coming in from the MD and CEO of Indian Hotels, Puneet Chhatwal. In a conversation with my colleague Priya Sheth, Chhatwal also talked about the company's expansion plans. Listen in.
We'll continue to work as we have explained in our strategy outlined under Aspiration 2022. We'll continue to add management contracts. We'll continue to open a hotel a month. We'll continue to focus on high margin business so that we can continue to grow our margins as well as our portfolio and create the best value proposition for all the stakeholders.
As we enter FY20, we understand that there are 22 new properties that you've signed globally. What is the kind of pipeline in terms of opening in India as well as overseas?
I think, Preeti, the pipeline actually stands at 30 plus properties. 22 were signed in the last 12 months, and since then we have signed 4 more. And actually we are just about to sign another one, so that will take it to 27 over the last 15 months. And we are very, very optimistic that we'll continue on this journey, and especially with the partnership or the platform that we have created with GIC, it positions us in a very strategic fashion to take benefit of any distressed assets that will come on the market, to acquire that through that platform.
So what's the progress on that? Have you all been evaluating cases at this point?
Sure, we have started, and our first officially meeting of the platform is going to happen in the next 10 days. We will review the first few possibilities that we have shortlisted, and as and when things come to fruition, you'll be the first ones to know.
So in terms of deployment, on an average by FY20, how much do you think will perhaps be deployed from that fund?
We cannot say that today, because if a great asset comes which costs far more, then the deployment in one asset could be more than the cumulative deployment in 3 assets. So actually we think the $650 odd million would be divided equally over the next 3 years.
Right. You also spoke about the kind of NCLT, the cases coming up in the NCLT. Chairman said that you all will perhaps look at evaluating some of those cases. So is there any specific, categories that you are interested in at this point in time?
Normally, it will be anything which is in the upper upscale or luxury segment, and we'll continue to grow our other brands like Ginger or Vivanta or the selections through normal management contract model.
So that means that by in this year you are at this point, are you evaluating these opportunities from the NCLT?
As and when any opportunities come up, they do catch our attention and we do try to evaluate them. Not everything makes sense and not everything is ready. Even those processes take a long time.
Okay, that's Indian Hotels. But let's talk about some more stocks. Here's Sonal with a roundup of what brokerages are saying on some stocks this morning. Sonal?
Well, Anuj, we have been talking about possibility of a cap on H-1B visas that is issued by the US. Now, Citi has written on the IT sector, they say a cap of around 10 to 15% on H-1B visas could severely curtail the on-site project delivery. Historically, Indians have been taking up around 70% of the annual quota of the 85,000 mark. And if this happens, it will be negative. However, they see the possibility of this happening to be very low. Moving on, CLSA has written on TVS Motors. They are talking about the annual report released by the company. They say that there is a cautious commentary on the FY19 and the FY20 outlook. Industry faces pressure of elevated channel inventory and increased product costs. They are also saying that the company's working capital has worsened in FY19, and that is why they have cut the FY2021 EPS estimates by around 11 to 16%. United Breweries will also be in focus because Citi has cut the target price from 1620 to 1560 rupees per share. They've also cut the EPS estimates by around 3 to 5%, and they are citing reasons with respect to higher raw material prices. They are also saying that elections will impact the Q1 of FY20 of the company. Lastly, Balkrishna Industries, Citi has cut the target price to 1,080 from 1,100 earlier. They say that the weak global demand will continue to put pressure on the company's pricing and also growth prospects. They've cut the EPS estimates also by around 2 to 3%. Back to you.
Sonal, thanks a lot for all that brokerage views. Sanjeev Bhasin is with us from IIFL now. Sanjeev, hi, good morning. I wanted your thoughts first on the housing finance stocks. We saw a short covering bounce yesterday in some of the weaker ones, but what would be your top picks in this area, if at all you're buying anything here?
Yeah, good morning. So, Anuj, the market, the broader market was heavily oversold, and that's what we said. This market is showing you or depicting your perfect bipolar, outlook where the large caps are only getting larger and the small caps are getting smaller. But that tends to happen when pessimism and despondency is high. You've had three of the worst areas, that's corporate leverage, debt, and corporate governance issues, companies being trampled. But in this, we are sticking to our housing finance companies, which we think will outperform. So HDFC takes the cake there, LIC Housing and Bajaj Finance. Now LIC Housing hasn't moved much, but we think that they will gain an inordinate share of market share. There is no problem of liquidity, and the NIMs, which are below 3, can actually pleasantly surprise on the upside. The only dark horse here which we think can deserve merit is L&T Finance. We think L&T Finance has a very strong parentage, and liquidity is not that big a concern as is with some of the other NBFCs.
Sanjeev, hi, good morning. Are you buying anything at all in this market, and if yes, what? Because it's so hard to find good, credible stories, right? Either the companies themselves are going through some issues with respect to debt, defaults, etc., or the industry is going through a slowdown. Amidst all this chaos, what are the top 2 or 3 stocks that you're buying now?
Firstly, Sonia, let me set the record straight. Let's not cloud the near term with the slightly longer term. This Fed easing, the ECB turning dovish is an extremely positive move for emerging markets. The Bovespa's hit an all-time highs. I'm not going to collaterals, but I think the Indian underperformance is about to end. Now, it may end on a price performance, but the quarterly earnings will take maybe a quarter or so. And like we said, October onwards, we think the market is going to be raring to go, with the budget being the game changer. And I can see a plethora of stocks which you can buy. But we are sticking to our picks, that is cement, construction, capex. So L&T, Siemens, ABB, these are credible names where we are, we've been bullish since some time. BHEL is a dark horse, at 67, 68, I think it deserves to be re-rated. And we are looking at some contrarian picks. That will include Ashok Leyland, Eicher Motor and M&M. But on the OEMs, we are more positive. Motherson, Sumi, Apollo Tyre, Exide. Now, these are names which have gone through the worst, and even now the macros don't seem so, positive. But you have to buy these brands when the prices are in your favor, because we think in the next quarter, plus the budget, which could be a game changer there.
Okay. Sanjeev, good morning. Today is the GST Council meeting, and we're not really expecting anything on tobacco. But, just in case, I want to draw your attention to ITC. The stock has fallen off a cliff from the 300-odd levels. What are your thoughts here?
Well, Surbhi, ITC, as a disclosure, is one of our top picks on the coverage side, on the FMCG side. Even today, you see the new launch. Their Sunfeast is going to take on the likes of HUL and Nestle in the coffee space. That just has a monopoly, and now this will add on to that. They are across the board launching in a lot of new FMCG verticals. Cigarette prices have gone up. The volume of cigarette has now fallen to 63% from its peak. So we think they are well in cost with a lot of other businesses. 7,500 rooms on the franchise level, the third largest in the hotel, the paper business, the agri-ariali. Some of parts, the GST, if it does come out with something positive on the sin tax or some reduction in this, that could be another added positive. But despite that, cigarette smokers are universal. It's an inelastic industry, and I think that sooner rather than later, ITC's outperformance is evident. We have a target of 375 in the next 1 year on ITC and a buy recommendation.
Okay. Well, I wanted your thoughts also on a couple of these auto stocks. There are fresh downgrades coming in on names like Maruti, etc. this morning. In fact, UBS has downgraded that stock to a sell. And they say that apart from, of course, all the slowdown, etc., the complete exit from diesel is a risk in FY21, because there's still a lot of space for growth in, this compact sedan, SUV, MPV space, which is diesel driven. Do you think that there's a further downside to go for stocks like Maruti?
Well, I think the 63, 64 is a very good level to buy. And if you do get it 300 rupees cheaper, then so be it. But Sonia, this is the best time you can buy the largest car maker in the country, given that everything is at an abysmal low. We think that come this June quarter, the BS4 to BS6 recognition, the scramble for buying, the pass-on effect from the, on the budget for NBFCs getting some window of clearance, and this liquidity, the mistrust between them easing. And thirdly, you're looking forward to the September, October and the festival season. So I think you can't get Maruti at these prices, but for this, the news. All is in the news. I think this stock should be definitely in all portfolios now. And if you have a 1 year window, then I don't rule out a 30-40% upside, given that you're at the lowest in the last 4 years on a base. And this industry cannot but grow over a period of time.
Okay, so that's a word on Maruti.
In fact, I'm just going to point out that report. So if we can just get the graphics for you on the screen. As I was mentioning, UBS has downgraded Maruti to a sell, and they've been holding on to their buy recommendation for very long now. It's just yesterday that they downgraded to a sell. They've lowered their target price was at 8,000. They've lowered it all the way to 5,800. So it's a big target price cut. They say that apart from the usual, a weak demand, rising capacity, etc., the issue is that now Maruti has decided to completely exit diesel from FY21, and that's going to be a big risk going forward, because there are still a lot of growing pockets that have diesel dependence. So whether it's compact sedans, SUVs, MPVs, etc. So that may not be a right strategy for Maruti. What they've also cut is their volume growth estimates to 5% from 8%. So, I just want to put that on the table.
Oh, absolutely. And it just reminds me, how things turn around. We went through this phase about 5 years ago when there was this big diesel debate that we are dieselizing the whole Indian economy. And now one of the biggest OEMs is actually going full petrol, the absolute other way. So, well, we live in interesting times. Okay, Sanjeev, just stay on. We'll come back to you for more questions. It's about 8:45. Let's also get some more trading ideas in on the futures and options side. We have Chandan Taparia joining in for that. Good morning, Chandan. What are the stock bets you're going with today?
Yeah, very good morning. On last trading session, we have seen a strong recovery in the market. Both the indices has been respecting to their 50-day exponential moving average and major support. So now it seems that some sort of stability and bounce could be seen in the market. We have seen surge in the put call ratio of the Nifty from 1.55 to 1.60, and fresh put writing is also visible at 11,800, 11,700 strike. So because of that, some up move towards the higher band of the trading range could be seen in the market. Talking about the trading ideas, first there is buy on Bajaj Finance. This stock is trading at lifetime high territory. It has been respecting to its rising support trend line, making higher tops, higher bottom on the weekly scale. We have seen open interest addition of around 7 to 8% in the counter. So expecting fresh leg of rally in the counter, one can buy with a stop loss of 35.25, and the stock has potential to head towards 3700 to 37.25 on the higher side. Second trade, we have selected to go long on L&T. We have seen positive rollover and roll cost in most of the capital goods counter. L&T Siemens have seen the positive price action. So here still we have positive on the L&T. The stock has given a breakout from its pole and flag pattern on the daily and the weekly scale, and it has potential to move by 5 to 7% going forward. So recommending to go long on L&T with a stop loss of 15.20 and expecting it to head towards 16.30 kind of level in next couple of trading sessions. One more trade, that is on ICICI Bank. We have seen a strong recovery in the Bank Nifty index from a support of 30,200, and that's why the Bank Nifty has potential to 31,000 kind of zone on the higher side. ICICI Bank has given a consolidation breakout of last 15 to 16 trading session, and as per the price pattern, the stock has potential to head towards its new lifetime high territory. On last trading session, we have seen built up of long position by around 6 to 7%. So recommending to go long on ICICI Bank with stop loss of 423 for an upside target towards 445, 446 levels.